Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have back with us Alan Masri, who's the founder of Safe Money Income and Insurance, and we'll be talking about overcoming the fear of outliving your money. Alan, welcome back to the program.
Thank you for having me, Mike. I'm glad to be here.
You know, I don't know the specific stats, but I'm confident that I've seen some articles out there or research that outliving your money is one of the biggest fears that retirees have. So get us started with where you start talking with your clients about outliving your money. How can retirees make sure that they have guaranteed income that they're just not going to outlive? Because we don't want that to be a big fear that keeps people up at night.
Oh, absolutely. I agree. And that is a big fear. That is a big fear for I would say, everybody. And, one of the biggest, fears is, facing the possibility of running out of money in retirement. But there is good news. With the right planning and mindset, the fear can be mitigated and even overcome in some cases. So, for example, a person could create a solid retirement plan. And that really starts with a clear plan that includes your income sources, monthly expenses, and how long your savings needs to last, number one. Number two, building a guaranteed income. Guaranteed income sources can come from several places. One of them is Social Security, a pension, for example, or a fixed index annuity with a lifetime guaranteed income rider. And, those are the things that are give people a steady paycheck for life, and it will reduce the reliance on their savings. Another one is working with a trusted advisor who, can help you avoid making mistakes, adjust your plan as life changes. That's a big one. And, ensure that your money is working efficiently, for the individual. And this is important, staying flexible.
Yeah.
Life is unpredictable. Being willing to adjust your spending habits, your investment habits, or even just your lifestyle, that can really help stretch a person's resources without feeling deprived. And also focus on what they can control. I mean, you can't predict the markets, or exact lifespan, but a person can control their budget, their risk, and their financial habits. And that's really how I would advise people to look at it.
That's a really good point. And I think that a lot of times people don't think about like the actual numbers, meaning, okay, in retirement, how much you're going to need, get a really, really clear and concise answer to how much you're going to need. And I think that sometimes people really don't quantify that correctly because they just think, oh, well, I'm going to need X number of dollars. But now that they're not working, they're able to spend more money because they're not working and they want to travel more. They want to visit the grandkids or whatnot. So how do you help your clients really polish up that gap of where they are and where they want to be and make sure that that gap is covered?
Right. Well, I work with a lot of federal government employees, and they're one of the fortunate few in this country that actually have a pension.
Yeah.
It's unfortunate there's a lot of people that do not have a pension, and retirement is based on a three-legged stool, basically. And each leg is a source of income. Typically, it's a pension, it's Social Security, and their 401k or their IRA plans. And, if a person looks at their monthly budget and their expenses, after we make some adjustments, knowing the fact that they're going to go into retirement and their income is going to change, there's always going to be that gap between the Social Security and the pension that they earn, for them to be able to maintain their lifestyle. So we use typically a 401k or an IRA plan to fill that gap. And the way we do that is we put it somewhere that will guarantee them an income. And another way is what we call laddering. I always tell people, never put all your money into one annuity. You can always ladder these annuities. So, for example, if a person has maybe 300,000, you could do one for 150, another for 150, and then you would activate income on one of them, and it's enough to maintain your lifestyle. As inflation goes up, cost of living goes up, you have that other annuity, it's still growing. So
Okay, yeah.
every year you wait, actually, the account value grows. Not only that, the percentage that is paid out of that a principal also increases with the carrier. So, like we talked about, sometimes talk about that 4% rule. But believe it or not, some of these carriers, if you're in your 60s, late 60s, it could be up to 7.2% of the account value.
Wow.
So by laddering these things as, cost of living expenses, you activate the other incomes. And now you're getting not just a social security check, maybe a pension check, but you're also getting a check from one annuity. That's 3 checks. And then maybe 3, 4, 5 years down the road, you need more money. Then you activate the income on the other one. You're getting 4 checks, and on and on. I mean, you could do that you can cut that pie up any way you want. And that's typically how I try to make sure that they have enough to live off of every month.
And by not relying on just one bucket or one source, then
Right.
that diversifies your flow of income, which is a good thing.
Absolutely. I agree. And
You mentioned a little bit ago too about writers in certain types of annuities, and I want to talk a little bit about that because I know that can some things that writers would cover, like long-term care, would really factor into the fear of outliving your money. Because what if I need long-term care? That can be extremely expensive, and if I got to pay for it out of my IRA or whatever other account, that's going to deplete that principal really quickly. So that would enhance that fear of outliving your money. Talk a little bit about how writers could help alleviate that.
I'll tell you what.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneursradio.com.